What did you take away from the tax debate last night? And what are you anticipating for this election that you see and how the market maybe is shaping up for that?
Yeah, so I think it's good, obviously, that both sides are starting to put more detail around their tax policies. But I think we have to take all of that talk with a grain of salt. There is a substantial difference between what's promised on the campaign trail and what actually gets through. I think for investors, if you focus too much on what is the proposal of a presidential candidate versus what can likely get through, you can sometimes kind of miss the forest for the trees. So you have to take the taxes in conjunction with the spending proposals. Right? And on the Republican side, I think enacting further tax cuts probably requires them the president not just to win re-election, but for the Republicans to take back the House of Representatives, and likewise for Joe Biden to be able to enact any of the tax increases he's talking about. You need the Senate to turn Democrat as well. So there's a lot of configurations where you don't actually have any tax change. And even the configuration where you do have higher taxes, those probably come alongside some pretty substantial spending increases as well. So the bigger picture for a sweep, let's say either side, one party, the other sweeps, actually I think you're looking at a lot of fiscal expansion. So we've been telling investors, don't get wrapped around the axle too much just on the tax side of this. It's really about whether or not there's going to be more fiscal expansion to support the economy in 2021 and continue to support the V-shaped recovery. And the configurations that most do that would be a Democratic win where the party takes control of everything, or a Republican win where the party takes control of everything.
You think that it's most likely that it's going to be an uneventful election. What do you mean by that?
I mean, I don't know that I would say it's most likely. What I would say is that it's becoming increasingly likely we could get surprised by an uneventful election night, right? So two things. First, I think markets are really focused on whether or not we're going to have a fiscal stimulus bill between now and the election. That's become increasingly unlikely. But of course, the election will probably tell you whether or not something like that is possible in the first quarter of next year. So the election itself potentially unlock some clarity around the really important election debate or market debate. And the second is that we have sort of sounded the alarm, and I know others have, about the increased use of vote by mail slowing the vote count. That's a challenge for knowing the result early. However, what we're also starting to see in this weekly data being put out by the states themselves is not only has vote by mail been shattering records, the return rate of that vote by mail has also been shattering records. Consider Florida and North Carolina, where they can actually count these votes early. Almost 40% have been returned already. If that accelerates, it's possible you could see some very early results come in that give you a very good idea on election night about what the ultimate result's going to be. It's still probably going to take a couple of days in our view. That's our base case, but I think it's getting less likely that the sort of really challenging scenario of it taking a couple of weeks or a month to know the result, that's getting less likely.
Question for you about volatility. There's a real sense that if we don't know for several days, there's going to be enormous volatility. And yet you talk to some professional investors who say the fact that we know that we might not know means that actually there won't be this volatile moment, perhaps, and this quote unquote opportunity. I think there's a view among some investors that there's going to be, that they're sitting with cash thinking, okay, there's going to be this moment and the moment may never come. What do you think of that?
Well, I think it's really tough to game out the degree of volatility that comes with just not knowing the election results. As I mentioned earlier, I think our base case is that it'll still be probably 24 to 72 hours before you've got a really reliable idea of what's happened, unless you get a scenario like North Carolina and Florida very clearly being Biden wins on election night, because the likelihood that Donald Trump could win re-election in that case becomes quite small. But to your kind of broader question of whether or not there is a volatility moment to take advantage of, regardless of how long it takes to know the result, there's always the potential for the markets to make mistakes. In 2016, for example, it was the consensus going into election night that a Donald Trump victory would be bad for risk assets. And for about 2 hours it was, and then of course it went in the other direction for the next year plus. Here, if we think there's a similar mistake to be made, it probably would come in a big Democratic win, because while I laid out the case earlier for you about why we actually think that could be GDP additive through fiscal stimulus, what investors are telling us in our surveys is that they're very much focused on the negative tax and regulatory implications for that. So our own equity strategy team thinks you could see an initial trade down in that moment, and that would ultimately sort of be a dip to buy, though.
Shepard Smith here. Thanks for watching CNBC on YouTube.